Good afternoon and welcome to the Wentworth Resources PLC half-year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Catherine Rowe, CEO. Good afternoon to you.
Thank you very much and good afternoon, everybody. Thank you very much for those that have joined to listen in to our results presentation for our first half 2022 financial results that we announced this morning. So thank you very much for taking the time. We have, as usual, a summary presentation to try to walk through the key points of our results, and obviously then very happy to address as much of the questions that we receive as possible. So just the presentation you have on the screen, I'll walk through. Delighted to be able to announce increasingly strong results for our business at Wentworth. This is a continued trend that we're seeing with our business, another set of robust and strong fundamentals that really demonstrates the operational and financial performance of the business. We are a single asset non-operated business in Tanzania, for those of you not as familiar with our business, and we're producing natural gas mainly for power generation to provide low cost, affordable power for the people of Tanzania. Tanzania is a fast growing, developing country in sub-Saharan Africa and has large ambitions to become the East Africa energy hub. And also that goal you see there on the left-hand side to deliver universal access to its people by 2030, which is quite an ambition. Current access rates, we think, are around 40%. Of people that have access to electricity. So we've got a lot more to do to bring electricity to every people. And we are a huge part of that story. We're actually contributing 50% of the natural gas demand alongside our Mnazi Bay partners. Mnazi Bay is our producing asset in the southern part of Tanzania, and it's performing incredibly well, which is able to deliver these strong results and fundamentals that we talk about today. I think the other overlay point to note is the increasing commitment by Tanzania to industrialize its economy, to grow its economy, to develop. And it needs low cost, reliable power in order to do that. And Mnazi Bay is one of only 2 producing fields, gas fields in Tanzania today. So we have a lot of opportunity to increase from our existing volumes to support that growth in energy demand. Just focusing for a moment on our delivery and what we're here to talk about today, our first half 2022 results. Not highest ever half yearly performance in terms of production, averaging just over 92 million cubic feet per day in the first 6 months. Our guidance for the year, which we set at the beginning of the year, 75 to 85 million cubic feet per day on average for the full year. And we're maintaining that guidance today until we see how the next month or so goes as we look towards the autumn and end of Q3 and Q4 production. We do have some work that we are looking to do in the field, some slickline and perforation operations that we've put there. And they could deliver incremental volumes to support that growing demand that I just talked about, and that may impact our guidance so that we look to either beat or go ahead of that guidance for the year. We've seen a really high Q2 performance, that second quarter of 86, and the reason we talk about that is because that's traditionally our weak quarter. It's traditionally the rainy season where we see quite a lot of displacement or some displacement for our demand for natural gas with the hydropower. So that's typically weaker, but we've seen a very strong Q2, and that's really partially lack of rainy season and a very dry very dry quarter, which we're seeing elsewhere in East Africa, unfortunately, with droughts, but also the performance of the old legacy hydro dams are not as productive and efficient as possible. So we've seen a very strong Q2, and again, that's a trend that we may see going forward. We keep this business very low cost operationally. So very nice thing about Mnazi Bay and about our business, that we do have those low costs of operation. We're always looking to increase cost efficiencies and reduce that further. The comparative for half year 2021 was $0.49 49 cents per MCF operational costs, and we've been able to get that down to 45 cents an MCF for OPEX. So continued strong production and a low cost operation, and you can see there again our 2P reserves of gas yet to be produced is still 135 BCF, which equates to that $109 million NPV valuation versus our market cap today of 40 to 45, $50 million. Revenues up to 15 million for the first half. That's a 32% increase on the comparative half year 21, and that's record levels of production at Mnazi Bay. That's enabled us to build cash further. So we reported a half year cash balance of $27 million, and we are debt free. And those fundamentals have allowed us to declare an increased dividend today, up 10% from half year last year, but actually 15% on a per share basis. And that's because of the share buyback program that we executed at the end of last year and again into the first half of this year, which we believe has been accretive for shareholders and allowed that per share yield to increase. And as the yield says, it's approximately 9% based on the current share price for the full year. Our two main off-takers, our two customers, government bodies, TPDC and TANESCO, both pay. TPDC continues to remain fully current, and they are by far our more material off-taker, and again that comes through in the strength of the financials. And TANESCO are continuing to settle arrears, and that's again been very positive over the period. I'll just move on to maybe delve into a few more of these key points. For those of you that have been following Wentworth for a while, we really started material production into the new national pipeline in 2015, and so for us to be able to celebrate 6 years of safe operations with no lost time incident in August was a real milestone. It is something we're very proud of. It's absolutely paramount to how we run the business and how the operations are run at the field. And so that's a really important KPI for us and our business. The interim dividend, as I mentioned, we have increased that, so that will be a total of $1.45 million, which will be paid in September, October, following these results. We talk about a 15% per share basis because of the share buyback. And if you look over the last 12 months, the interim dividend this time last year, the final dividend that we declared and that was approved by shareholders at the AGM, that was the final dividend for 2021, plus today's interim dividend for the half year 22 and the buyback program, we've returned just under $8 million worth of distribution back to shareholders in the last 12 months, whilst also preserving financial flexibility and firepower for growth opportunities going forward. So that may be something we're asked thinking about capital allocation. We're trying to demonstrate that this business is capable of delivering those types of sustainable returns to shareholders, and also remembering that this dividend policy has now been in place for 3 years. Our first dividend declaration was September 2019, and every dividend that we've declared since then has increased, and that really supports the progressive policy that we committed to and just demonstrates a track record and sustainability of the dividend and how this business is able to deliver that. Revenue growth, again, that's due to those record production volumes, and I'll just take you from the revenue growth to the focus on profitability in the middle box below, because what you can see there is a very healthy increase in revenue, 32%, but an even healthier increase in EBITDAX of 43, and that's really due to driving profitability, and that's partially due to our inflationary price mechanism that we have on our fixed gas price. So we have a fixed gas price, but we do benefit from US CPI, not quite the same as inflation, but correlated on an annual basis. So we are seeing our fixed gas price have an inflationary element to it on the upside, but we're not seeing cost inflation because our costs are largely fixed. And that's, again, very nice place for us to be, very fortunate that we have low cost of operation and they're largely fixed. So in this macro environment where we're seeing a lot of cost inflation, we're not seeing the downside of that, but we also are getting some benefit on price inflation, and that's really driving that enhanced profitability that you see here. Talked about record performance in terms of production volumes, 92 million versus the current guidance is looking very healthy indeed. And we are here to continue to be that partner of choice for Tanzania, with our ambition to be ultimately the leading onshore domestic gas producer in Tanzania, as we see this demand coming through. And it's the demand for gas that's driving, really driving these fundamentals. I'll try and touch on that a little bit more. I think mostly we've covered this slide. As I say, this inflationary price mechanism, and not offset by cost inflation, is really seeing a really nice EBITDAX coming through. We're being able to maintain that low cost of cash position is healthy. There will be questions about the best use of that cash and how we deploy that in the best accretive way for shareholders. And we talk a little bit about growth further on. And again, we feel that this business is capable of delivering capital growth and growth within Tanzania, whilst also supporting a sustainable distribution back to shareholders. And I hope you can see those messages coming across. Again, I'm on the slide. Probably not too much to dwell on, other than clearly we look the chart's going the right direction. You can see how we've improved and stabilized and strengthened the business over the years, whilst also trying to be fiscally disciplined on costs. We do have this production that's just for half one, and obviously this revenue and low cost of production. So obviously we're looking forward to a strong second half and hopefully being able to report really good results for the full year as well. Just this slide, again, I think really what this tries to highlight here is that increased production and the growing demand that we're seeing. There was a time, back in, if you look at the chart, back sort of when we started production 2015 and then 2016, where it sort of became a bit more material, it was demand constrained, and we were not seeing the demand for the gas from the government at volumes that we would have liked to have seen. And it's partly because the distribution and transmission of that gas at the power station needed to catch up, and we're now seeing that coming through. And you can see that in this chart, there is an aggregate increase in demand, and the government wants more gas. The country needs more gas, and that's the opportunity for Wentworth. Very few of us in country in the domestic gas space. This is the opportunity for us to capitalize in, and we are doing it in a very productive and business-friendly backdrop. And you can see in the light blue circle here, some of you may have seen the framework agreements being signed between Shell and Equinor with the LNG projects. That really demonstrates in a tangible way the commitment to the government to try to encourage international investment and improve and mature the gas sector, both onshore and offshore. And we're seeing that encouragement coming through and gives us even more confidence that we'll be able to execute on our growth. Capital returns policy, I think I've pretty much talked you through this. It is a major commitment for us. It's important that we continue to distribute capital back to shareholders, because we think it's the right thing to do to reward shareholders for loyalty whilst we look at capital growth. but also to underpin that this business is capable of delivering that. And I'm proud that the asset fundamentally is able to continue to perform and deliver these types of returns. And a 9% yield for a single asset non-operated business in East Africa is quite remarkable in my view, and it's one of the highest in the independent E&P sector, and it's certainly the highest in our immediate peer group for those that are even paying a dividend. Corporate update. I think I'll touch on this. We announced back in June that we had agreed terms to acquire a 25% non-operated working interest in Rovuma. Rovuma is an appraisal license, or it's currently in an appraisal phase of its license in the next door, in the adjacent block to Mnazi Bay. We have been looking to diversify our portfolio and looking at the right opportunities at the right time for Wentworth to really capitalise on our track record, our relationships and our knowledge. And Rovuma, we've been a natural buyer for that piece for Rovuma for a long time. Sirocco publicly announced it was for sale about 2.5 years ago, so it's been publicly available. And again, you know, Wentworth has always been a fairly obvious partner to look at it. We had been looking at it for some time. We needed to make sure that the terms were right for Wentworth and accretive for our shareholders. And so we needed to get to a stage where we were able to negotiate terms with Sirocco that demonstrated that risk-reward nature of the asset. There is still some risk attached to the asset. It needs appraisal well drilled. Currently, seismic program is ongoing, so we need to the partners need to look at that seismic and interpret that before deciding where best to drill the well, and then we'll see what the results are after that. From our perspective, it was the right time. Again, we needed to see commitment from the operator, ARA Petroleum, that they were committed to the work program and that they were going to move forward, and they are. As I say, that seismic program is underway, and that was a real positive to see that they're committed and they're working, and it's moving ahead in a very tangible way. So it was the right terms and it was the right time for Wentworth to negotiate that deal, and we were very pleased with it. It was always subject to preemption. There are preemption rights within the joint operating agreement in Rovuma in the same way as we have in Mnazi Bay. So we have preemption rights in Mnazi Bay as well. So for example, should someone make a bid for Marl and Prom or their share of Mnazi Bay, we would have the ability to exercise preemption rights if we chose to do so. So preemption is always a risk. The way that we mitigated the risk from a Wentworth perspective in this particular transaction was to ensure that the drawdown of the loan agreement that we had with Sirocco, which was part of the transaction, was that a CP to drawdown would be the non-preemption rights being exercised, and of course Sirocco's shareholder approval. Sirocco successfully had their shareholder approval, but we did unfortunately get preempted by ARA, so we protected ourselves from a financial position. I think, you know, disappointing whilst it might be that ARA have exercised their preemption rights, we understand why they have. They're favourable terms. It goes to show that they were good value terms and the right level, we think, but it also shows that there is some value in the asset, and we'll continue to keep a close eye on it. You know, we do like the asset, and we do think that it'll be an important asset for Tanzania going forward once that first gas comes on stream, and you know, there's always an opportunity to continue looking at it. So in the meantime, we actually have to focus on Mnazi Bay. That is our core asset. It drives our core value. And it requires reinvesting and optimizing. And we also have other opportunities that we're looking at. And again, it's about the right terms at the right time that make sense for our shareholders. And that's really what we're all about. How do we optimize and leverage our strengths? We've got a really, really core, strong, key asset, and we're always looking at ways to optimize it. One of one of the things we're doing immediately is a few perforation and slickline jobs that I mentioned at the beginning to try to support and deliver some incremental volumes in the field in the very short term. And that enables us to look at the reservoir and look at the field performance and determine the bigger investment and the bigger capex that we see coming in the next couple of years for Mnazi Bay. But we're also looking at ways to supplement that. It is a small opportunity set in Tanzania, but there are only a few of us, and we know all of the opportunities extremely well, and at the right time there'll be a chance to execute on those. And it's really about increasing our footprint to help partner with the government and deliver that universal access that we talked about earlier. Sustainability remains a really key part of our business and underpins our ethos and the way that we do business. We do have one of the lowest carbon intensity in our London listed E&P sector, and we're proud of that, but we're always looking at ways to reduce that further. We're working more and more with Marl and Prom on our initiatives, and we have brought them alongside with us as we look to increase and be quite a front leader in our ESG and sustainability strategy. And some of these metrics you see here are compelling and shows you how important we are to Tanzania, but also how Tanzania is tackling its own energy transition. You know, we're all sitting here, or you know, for those of us that are sitting here in the UK worrying about energy prices and the economy, Tanzania has security of supply with its domestic gas. It has a fixed gas price that it's paying for $3 an MCF. It's able to sustain not only the status quo, but also look to grow and develop its economy when the rest of us may be in recession in a couple of years, and still do it in a low carbon way through natural gas. So, you know, it's actually, Tanzania is a very fortunate, very unique position, and we're proud to partner alongside them. As we have done for the last 2 years, every year with our sustainability journey, we look at increasing our objectives. What can we do to move forward on our journey? And some of these are the things that we're looking at for this year. And obviously, we'll be publishing our 2022 sustainability report with our annual report in Q1 next year. What was really important, you'll see on this slide, is that we were able to formally present this report in August at the 4th Tanzania Energy Congress. That was the first time it had been held since 2019, and it was well received. You know, there's a big focus from Tanzania on its environmental responsibilities and its own energy transition in a just but low carbon way, and to be able to present this aligned with them and having TPDC as a partner and a party to our report, it was very well received. And what I'm hoping is that you will see some of these emissions reduced even further when we publish our next report. So I guess to finish up before I address some of the questions, outlook remains really strong for this year. We're really pleased that we've been able to increase again the returns, and you know, I hope we have a strong second half that allows us and underpins our final dividends that we'll be able to declare for the year as well. Strong production, and again, if you look on the right hand side, these are really sort of what's driving that increased demand. Really nice to see overall power demand nationwide increasing. So it's strong for Mnazi Bay and it's strong at Songa Songa, and that's fine with us. You know, we want to see that increased aggregate. But we're also seeing industrial customers increasing as well. Following the work that we talked about, the perforation and slit line exercises, we may look again at full year guidance, but we're certainly at the top end of our current range. And we are looking at growth opportunities. We do have things that are live, that are ongoing. But I hope that if Rovuma demonstrated anything, it showed that we'll only do it on the right terms for us. You know, that's what we stick by. We have to be disciplined about that. We're not going to dilute shareholders. We're not going to use that hard-earned cash without actually ensuring the terms are accretive and work for shareholders. So outlook is good. We think even more so for 23 and 24 and beyond as well. As we're looking forward to reinvesting back in Manazi Bay. We've had a very fortunate few years of very little investment, but actually it's exciting to be able to move the asset forward into the next phase, and we'll be able to talk more about that towards the latter end of this later part of this year. So thank you very much. Bit of a whistle stop tour, but hopefully cover the key points, and I think I can probably move on to taking some questions.
Catherine, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just using the Q&A tab situated in the top right-hand corner of your screen. But just while Catherine takes a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Catherine, as you can see, we've received a number of questions throughout today's presentation, and thank you to all the investors for submitting those. Catherine, could I just ask you to read out those questions and give responses where it is appropriate to do so, and then I'll pick up from you at the end.
Great, thank you. And I'm going to take Michael's questions first. Thank you, Michael. You've got a couple here, so I'll try and sort of maybe group them together. So one of them was around Rovuma or other opportunities now that we're unable to pursue Rovuma. We do talk about the wider region outside Tanzania as potential as well. You're absolutely right. We feel very strongly about the opportunity in Tanzania, and there's so few players, really. It's Wentworth, Moran and Prom, ARA and Orca, really, are really the sort of active companies in the onshore domestic gas space. So with all these fundamentals that I talked about, you know, how Tanzania is really quite unique and almost sheltered from a lot of the difficulties going on in the world right now. So that is also our skill set. So I do believe that we are best placed to look at Tanzania opportunities as a priority. And there are a couple of really interesting opportunities that I think will fit very well into the Wentworth portfolio. Execution is difficult. Execution is always difficult, as we've seen with Rovuma. And Michael, maybe this addresses another one of those questions. Were we too optimistic to not expect ARA or even TPDC to exercise their preemption rights? That 25% had been on sale for 2.5 years. So at any point, anybody could have come in and made an offer. We weren't an exclusive party, but no one else did, and no one else made an offer to the point where we've got a binding agreement. And so it's opportunistic. It's within their rights, and as we all know, preemption does and can happen. So I don't think that we were too optimistic. I think we actually structured our deal very well. I'm glad that we had no financial exposure to Sirocco until we knew the situation, and we were thoughtful about that. So I think, to answer your question, there are opportunities in Tanzania which we can grab on the right terms at the right time. If we're unable to execute on those, then we may look in the wider region, because we do know it well. And again, I think, Michael, one of your questions was no, I think that was around share buyback and dividends. So I'll come back to that. But I think it's got to be compelling, and we've got to use our skill set. We've got to be realistic about what we're good at. Going off and entering a non-operated interest in a new jurisdiction where we can't add value, we have to question whether that would add value for Wentworth shareholders. If you want exposure to other countries in Africa that you think are interesting, then obviously there are companies that you can go and buy to get that exposure. We are clean and simple and clear about our strategy, but fundamentally it's about looking at things that add value for shareholders. So if there's an opportunity that meets the criteria and is too good outside Tanzania to pass up, then yes, of course we would look at it. And Michael, I'm just going to take your last point around rationale of buyback relative to more capital in the form of dividend. Good question. It's something we talk about a lot. There is a continuing trend of companies doing both. I think there's rationale in having the buyback program as well as the dividend. Obviously, with the buyback for us was that when the price was weak, what better use of our cash than buying our own stock when we're trading at so far below core value, and we remain of that view. Should the share price drop back to those 20, 21, 22p levels, we believe there isn't much better use of our cash than buying back our stock, but we have to balance that with the lack of liquidity as well. So one of the things we suffer from as a small company is low liquidity, and so we just need to make sure that we don't take out what little liquidity there is from the market. At the same time, the dividends is really important, and we want to enable enough sufficient firepower to keep that progressive. So it's something we always think about. We talk about. We welcome input from shareholders about what's more meaningful. Really nice today to be able to say increased dividend, and it's enhanced on a per share basis because of the buyback, and we'll continue to look at that. So I think, thank you for your questions. We have another question here from Sat, and I'll take them together. Actually, I think you've got two. What are the future plans for the cash on the balance sheet, and are you allowed to sell gas to non-government customers? I'll take the last one first. Under the Petroleum Act 2015 in Tanzania, TPDC, that's the state oil company, are the aggregator. So we aren't able to sell directly to additional customers. We do have to sell to the government. Obviously, then the government can sell on to direct end users. But we need to sell to the government as our main off-taker. That doesn't mean we can't help the government in their discussions with end users and direct customers. But in terms of our contractual arrangements, it is straight to the government. Future plan for the cash on the balance sheet. Hopefully, I've tried to address this a little bit. We're well aware of the cash. It's not a desire to be overcapitalized. Obviously, it's a nice problem to have, and I think we're about to go through a very difficult 6 months, particularly as we see the world going through a recession, particularly here, and cost of living crisis, and how that might impact equity markets. So it's a defensive place to be. That doesn't mean that we shouldn't be looking at ways to utilize that cash and make it work for us. And as I say, we have got a couple of opportunities we're looking at. If we can't execute on those, then that it may be the right thing to do to return more of that cash to shareholders. So thank you for your questions. Another question here: how much have we spent on M&A, and how do we see impacting valuation, gap to NAV, free cash flows available? I think the question here is, obviously we have to spend money on new business ventures. We did look very hard at something during 2021, which you saw reflected in the accounts for 2020. We have reported some costs today in our half year related to Rovuma. We tried to do it as low cost as possible. So whilst I'm not answering the question in terms of dollar amounts, I can say that that's why we have to be very careful about what we look at and disciplined. And what we don't do is scattergun, look at opportunities and spend money evaluating opportunities that don't fit the strategy, because we are quite conscious of cost control and trying to be disciplined on that. So I hope that's sufficiently answered that question. There's another question here about, are we looking at other assets in Tanzania or elsewhere in East Africa? I think I probably addressed that earlier. Priority is Tanzania, but if there was something in the East Africa region that looked compelling enough and fit our domestic gas strategy and our sustainability strategy, then yes, we would look at it. Thank you from John. Has a couple of questions here. Great results, thank you. Current Mpv of assets likely to be? Well, we have the Mpv 10 at the end of December 2021 was $108 million. Obviously, for this year, we'll have produced more of that 2p, so that Mpv will decrease as a result of production. But we're just kicking off the reserves report process as we speak. So you'll see that. And I think your point there as well, John, about US or CPI, you know, it's retrospective. So on the 1st of January 2022, we didn't get the benefit of this high inflation, if you like, that we're seeing, which we will get in the 1st of January 2023. So US CPI is retrospective for the prior year, and I think we'll see a healthier, you know, we're modeling 7%, but it, you know, that may be conservative, it may be higher. But what we do in January, when we publish our reserves report for the year, we also announce the gas price for the year, following that CPI increase. Great, thanks for the questions. Another one coming. What do you think, can I ask how you think the LNG plant will affect Wentworth if it's actually up and going in 2030? Yeah, you know, really exciting. That LNG is in Lindi. That LNG port's near Lindi, which is just a little bit further up from Manasseh Bay, from Mtwara on the coast. So will there be demand for power up for the construction of the LNG? You know, would it be better to use onshore gas for $3 than bring offshore gas onshore for the construction? Quite possibly. So, you know, we're really excited. There's a huge change in sentiment between Equinor and Shell in Tanzania. You know, I've spent time with both of them in the last month, following their framework agreements, and very excited and optimistic about moving forward. Big splash about Tanzania LNG. We are 10 years away, of course, but if construction starts, so we're excited about the positive overlay, but also to your question that I think you're asking, Mark, which is how we could be affected and possibly helping to supply power for the construction of that, because we're very well placed geographically at Manasseh Bay. Ingemar, we have a couple of questions from you. Has there been a change in the organisation? Admin expenses have been increased, decreasing the corporate level. The admin expenses are fairly stable, to be honest. I mean, no major changes. We always look at ways of making cost efficiencies, but also it's important to retain the loyalty in the staff. I mean, particularly in our Tanzania office, you know, we've had no staff turnover for the last 8 years, and again, with myself having been involved for 8 years, there's very stable team. So there hasn't really been a deliberate or sort of specific sort of structural change in admin costs. You know, one of the great things about Wentworth is its stability. It's the way it's run, and again, I hope that you can see that coming through with the results. You have another question here around consider a capital injection into Sirocco instead of the acquisition of the license. A change of control, even if you acquired Sirocco, for example, a change of control at any level triggers preemption rights. So it wouldn't necessarily have got round the preemption risk, if that's the question. Okay, thank you. Another question from Michael. Both Auctus and Senkos have price targets in the 40 to 50 range. Do you think you need to do the share price move sustainably higher? It is frustrating. We've done a huge amount with this business over the years. It's continued to perform, really optimistic about the future, and yet we don't really get any credibility in the market. I think it's partly a function of size and liquidity, but also, you know, general market sentiment. So it is frustrating. We like the support from sell side. We believe their price targets, as you can see from their models, are underpinned by realistic deliverables that we think will come from Wentworth. Our job is to try and close that gap as best as possible, but we can't control the share price. What we can control is how the business performs and the fundamentals, and that's what we remain focused on. I have a question here, repatriation issues, and could this affect Wentworth? We get paid in dollars, US dollars for our gas, and we repatriate 95% of our cash with no issues. So the majority of our cash sits in our Jersey subsidiary. We keep a small amount in Tanzania for working capital purposes, but no repatriation issues. And last question, I think, is it possible for you to act as a magnet to draw further UK business to Tanzania away from China? Well, thank you. It's a question from Ian. Really, really good question. One of the things that I think we need to do is put Tanzania on the map and encourage increased investment. And I'd love to see more UK investment. And I've talked to the UK High Commissioner in Tanzania about this. We've been having this conversation when I meet in Tanzania about what we can do to increase further business, UK business, because I think it's a really good point. And there's all this opportunity, and yes, I'd love to see that. So thank you for your insightful question there. And actually, all of your questions and for all of the interactive nature of this makes it more interesting for me. So I really appreciate it. Thank you.
Catherine, thank you very much for that. And I think you've actually managed to address all the questions from investors. And of course, the company will review all questions submitted today and will publish those responses on the Investor Meet Company platform. Just before redirecting investors to provide you with their feedback, which I know is particularly important to yourself, Catherine, could I just ask you for a few closing comments?
Thank you. Thank you again, Investor Meet Company, for supporting this presentation, and for all of you for dialing in. I hope that you value this forum to listen and ask questions, and I really appreciate the feedback and input. So thanks again, and have a good afternoon.
Catherine, thanks once again for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Wentworth Resources PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.